Hi, and welcome to the Stockscores Market Minutes for November 9th, 2015. Next week and the following week, I have a number of free webinars. They'll be hosted by me on a variety of different topics. Thursday, November 12th from 6 till 7 Pacific time. That's 9 till 10 Eastern time. I'll do kind of a basic how to read chart patterns, how to analyze any stock in 10 seconds. It's a good precursor for the others, so if you want to take in all of them, make sure you participate in that one as well. The following Tuesday, how I day and swing trade the market. That's Thursday of the week of November 19th, how to grow your retirement portfolio. And then on Tuesday, November 24th, how to trade the Stockscores approach. You can go to stockscores.com/webinars or just go to the Stockscores homepage in the upper right. There is a link to the webinars registration. Register online and you will get an email reminder an hour before the webinar. And again, they're all free, and I think you will enjoy them and find them valuable. All right, let's do this week's analysis. Here is the S&P 500 chart for the last month. You can see we are in an upward sloping channel. The market kind of went, I would say, quiet and didn't have great follow through at the end of last week, Wednesday, Thursday, Friday. You can see it was pulling back to the bottom of that channel. It bounced off of that channel and broke the downward trend on Friday. That means we should hold this upward channel and move higher into next week. What we want to watch for is if that green line, again, this is a 30-day, 60-minute chart. So if you see a breakdown of that trend on the intraday chart going back a month, then you got to be a little more cautious and expect some selling pressure, which the market is long overdue for. Here's the longer term chart, and you can see we've had a great rally back from the lows in August, and then a secondary rising bottom in September. October, nice rally. First week of November, we're still rallying and almost back to the old highs. We're kind of at resistance right now if I draw that line right across the tops, but it would be better if the market moved up a little higher. Then we wouldn't have that falling top, which I warned about back in September, August when the market was correcting. So market's made a pretty good recovery here. It indicates that the bulls are still in control, but my sense is, given that breakdown, we may be destined for a little bit of sideways trading for a while, although I'm starting to feel like stocks are able to perform individually. Here is the Russell 2000, and this is a daily chart because it's something real important this week. The Russell has broken the downward trend, really broken up and through resistance from a head and shoulders bottoming pattern, and that points to the small caps starting to catch up to the large caps. They've really lagged for some time. We've talked about this many times. But if you like to trade individual stocks, this is good news because there are so many of the smaller cap stocks that have really lagged. Many of them don't have great charts yet, but they're starting to look better, and that'll be a place for traders to take advantage of. TSX 60 in a downward sloping, what I call a falling wedge, where the tops are falling quicker than the bottoms, and that's actually a pattern that means the enthusiasm for the sellers is starting to diminish. But until we get a break up through that red line on that chart, it's really nothing positive. So it's still a negative chart pattern in the short term. Longer term, we are still below that long-term downward trend line. We're testing it. We tested it a couple of weeks ago, and we'll see if we can ultimately break up through that red line. But at this point, this is still a pretty negative chart, so I want you to be cautious with Canadian stocks. The strength in the US dollar is hurting the commodity stocks, and you can really see that in this chart. The TSX Venture, of course, 2/3 of those stocks are in the energy and mining small cap space, and that section of the market has been suffering. You can see we're right at support. Maybe we'll bounce next week, but as I've said many times in the last, in quite a few years really, this is a market that has generally been decimated because of the weakness in commodities. Real important chart here, this is the Treasury Bond ETF, TLT. It broke down, which means interest rates go up. That is the market speculating that the Fed will raise rates at the December meeting. Many people expecting that now. I believe the futures market has priced in a 58% probability of that happening, and it looks to me like that could even improve. So given that there was a lot of talk this week about interest rates going up and the market didn't collapse, it almost feels like Janet Yellen has been given a pass to raise interest rates because the market didn't react negatively even though the bond market dropped like it did. The result also is that the US dollar takes a spike higher this week. I talked about the break of the downward trend 2 weeks ago when that happened. You can see the green candle 2 weeks prior, and now we're getting the follow through of that expectation. When that downward trend line was broken, it pointed to a higher US dollar. And that is because the expectation is that the Fed is going to start to raise interest rates, which makes the US dollar more desirable. It also makes gold less desirable. We see a pretty strong selling week. This is a weekly chart for gold. We hit the top of that channel, got stuck, rolled over, and it looks to me like we are now headed down toward the bottom of that channel. This remains a bearish chart. Oil, despite the strength in the US dollar, has held up pretty well. I've chosen to put up a daily chart this week of oil stuck in that sideways range, which is at a rising bottom. The market's starting to speculate that maybe the global economy is getting better. And if the global economy is getting better, that means demand for oil goes up, even though oil is more expensive because it is priced in US dollars. So real interesting how the oil chart is holding up even though the US dollar really spiked higher. That's something we wouldn't normally expect to have happen. So we'll see how that pans out in the weeks ahead. Final chart, as always, is the chart of the VIX, which is the VXX ETF based on implied implied volatility of the futures market for the S&P 500 contracts. And you can see it really didn't go anywhere this week, stuck in that very narrow sideways range. That really shows us that there's not a lot of fear in the market. I would argue this is a bit of complacency, could be a little bit of a problem if the market hits resistance and rolls over, as I expect it will in the short term. So US stocks, neutral long term, right at resistance, where I do expect some sellers to come out, but the trend is still bullish, so you have to stick with the trend on the short term. Canadian stocks, bearish long term, neutral short term. It is trying to base, but it's got a lot of work to do. You could almost make that short term outlook bearish as well. Gold, bearish on both time frames. Oil, neutral on both time frames. The market is pricing in an increase in US interest rates soon, and those who would sell on a rate increase seem to do that back in August. And maybe now that that section of the market that would sell on a raise of interest rates did all their work in August and September, maybe that's why we haven't seen some selling pressure now that the market is again speculating that interest rates are going to go up. Stocks have rallied into resistance, so I would expect some strength to stall in the short term. We'll probably get stuck, maybe see a little bit of profit taking in the near term, but no sign of it yet, just something to keep in mind on going ahead. Oil is holding up better than expected given the strength in the US dollar, but gold remains bearish. Fear is relatively low. Well, that has been the Stockscores Market Minutes for November 9th, 2015. Have a great week in the market and trade well.